Hey, folks, now it's time to get into a little bit of insurance talk. We're going to talk deductibles, as we talked about. We got Richard Tonica right here live in studio. His website, richardtagency.com, richardtagency.com. What's up, Richard?
Woohoo, way to go, me.
Yes, you.
How's everybody doing? Let me first start off by saying thank you to everybody in this Thanksgiving season. Let me be the first to wish everyone a happy Thanksgiving. I hope we all take a moment to really say how thankful we are about the things that we have and where we are in our life, and get on our way to get to where we're going. So anyway, that being said,
absolutely, a lot of travel gonna be going on, and everybody be safe.
Well, even during the lean times of the Tonica household in years past, this was one of the times of the year that we made sure that we went out and gave back, because there's always somebody worse off than what you are.
Absolutely.
And speaking of that, we're going to jump into insurance talk.
There you go.
Because the whole thing about insurance is making sure that all your assets are covered. And if they're not properly covered, then you are going to be worse off than what you were before the accident. So it's making sure that you have the right policy at the right price, but also looking at what we're going to concentrate on today is deductibles, because deductibles are going to play a major part of what you're going to pay and how often or if you put in a claim. Because the lower your deductible, the reason that the rates are usually higher is because they know, or the insurance companies know, that you're going to put in more claims. There's a reason that you want a lower deductible. It's because usually those people do not want to come out of pocket anything, and so anything that pops up, and they're going to put in a claim. And when we're talking about deductibles, there are percentage deductibles and there are traditional deductibles. Percentage deductibles. Let's say that your house is $100,000 house, because we got to keep it simple for my math. So you have a 1% deductible on your house. So anytime some kind of covered risk happens to your house that's more than $1,000, you can put in a claim. Would I advise you to? Absolutely not. It depends. Well, it depends on what kind of claim it is. First, we do our due diligence. But that being said, we look at how much your deductible is and how much the estimates are to repair it. Now, what I normally go by is 2 times the deductible is when I put a claim in myself. That's where I feel it's financially, I'm being financially responsible, and I'm not being frivolous with my claims. Because the more claims that you put in, obviously the higher your rate is, depending on if it's characterized as a catastrophe or not. If it's non-cat, those claims can add up quickly, and they really can affect your rate. If it's a cat-related incident, like a big hailstorm or something like that, those things do not affect your rate for some carriers. Other carriers, they're still going to penalize you for it, even though you couldn't pick up your house and move it out of the hailstorm's path. So, if your house is $100,000 and you've got a 1% deductible, anything over $1,000. So those people, if that's what you're living in, you might look at a 2% deductible. 2% for someone coming out to do some kind of work on your house is not that big of a deal for them to. Now, I can't ever have the conversation with them about if they will work with your deductible or not, because I don't want to have my license taken away. But if you had it, I mean, $2,000 out of pocket to get something repaired is not that big of a deal for most people. So the lower your home dwelling is, because on your house, when you're looking at percentage deductibles, what you're looking at is the value of the replacement cost for your home, the dwelling, coverage A. So it's $100,000. If you have 2% deductible, $2,000, not that big of a deal. When that starts becoming a big deal is when you get $300,000, $400,000, $500,000. Now you're looking at, okay, if it's $300,000 and you've got a 1% deductible, you're going from, you have $3,000. If you have 2% at that dwelling price, now you're doubling up $6,000. That's a bit harder to swallow.
Mm-hmm.
And so the higher your value is of your home, that's when we're looking at, you might not want to do this. Maybe 1.5 if the carrier actually offers that. A lot of them don't. Or going to a fixed deductible or the traditional where you have $2,500 or $5,000 and doing something like that. But it's really, when we're talking about giving you a personalized policy, it goes all the way from the coverages that you select, the endorsements that we add, and the deductibles that we add to your policy, because what your risk tolerance is different from Perry's and it's different from mine. Mm-hmm. And so I know people that all they want is absolutely total loss, and that's it. And he had his house paid off, so he wanted a 5% deductible on his house. I was like, I personally wouldn't do it, but if you want to do it, that's your decision, and I'll do whatever you want, because at the end of the day, it's your policy.
Right.
But if you have a mortgage on your house, there is absolutely no way any mortgage company is going to let you have a 5% deductible. You're lucky if they're going to give you a 2% deductible. And it's something that we work with a lot of people is, where are you in this whole cycle or the home purchase life? Do you own your home outright, or are you making payments? Because if you're making payments, we know that we're either looking at 1% or 2% deductible, or if it's a fixed amount, because there are companies out there that will, I don't care how much your house is, they will let you have a $1,000 deductible or a $2,500 deductible. You can have a $300,000 house and have a $1,000 deductible, which is unheard of, but it happens. Are you going to pay more for that policy? Yeah, probably.
Yes, yeah. Absolutely.
It really depends. I mean, there's a lot of factors, and we'll get into how some of the homes are priced, but it really matters on a lot of factors. But I mean, that 1% or the $1,000 deductible for a $300,000 house, the $1,000 is going to be more than the 1%, but it still may be less with this company A, over any other company that has a home policy for that particular house, even with the same endorsements and everything else.
Right.
And so it's going through there and looking at all that is how we determine what is the right policy, or we don't determine it. The customer determines it. I just give them all the facts that I can.
Yeah, and you give them all the options. The important thing to think about is, people view homeowners insurance in particular in a very narrow view. They're like, okay, we got Farmers, we got Allstate, we got State Farm. You have to go to a big boxer, and you just get whatever policy they offer, and they're just going to shop the rate.
Yes.
But they don't understand insurance behind the scenes, which is where you come in, because you shop the 25 plus companies behind the scenes. They're companies that the consumer can't even get to. And, these are the companies that often insure the big box companies in some cases. But you go behind the scenes and you get the options for them. You break down the policy into a number of components, which they can say, okay, where's your risk level for this? How about this? How about this? And then you get into the information about their home. Do you have a lot of trees in your home? Do you have outbuildings? Do you have all these things? Are you at the top of a hill? Are you at the bottom of a hill? All of these types of things that Richard talks to you about, and then figuring out what's the best policy for you and getting your risk tolerance, and then getting you a great price. You don't want to just shop price when it comes to homeowners insurance, because honestly, do you want to insure your biggest asset, or not? And do you want to be covered when something happens? If you just want some lowball price and some generic policy, well, guess what? You're going to be, at least we're going to tell you, hey, you're going to be in a very, very, very bad position should something happen, which the big box guys aren't going to tell them. They're just going to say, hey, here's the lowest price, take it and run, because they know more than likely you're not going to look at your homeowner's insurance for another 5-10 years.
I made my sale. I've got these. I've hit my quota for this quarter, and blah, blah, blah. That's something that we don't do. We're not concerned with that. We're concerned that making sure that the customer is taken care of. In fact, there's one customer that I've been working with for a while, and he did exactly that. He shopped all on price. Didn't realize what kind of policy he had until I sat down with him. He finally showed it to me, and I was just like, okay, this is the reason that I'm not going to touch this price, because I'm offering you this and it's worth this, and this is what you have. And I showed him everything that it didn't cover, and he was absolutely floored. And because other agents haven't taken the time to show him exactly what he's had, and he's had 2 or 3 agents that have had him with the same policy. And that's the hardest part, is if something would have happened, he absolutely would not have been covered. And finding out that you're not covered, or you're not covered at the level that you think you are after the fact, is the absolute wrong time to find out.
It's the worst feeling. And unfortunately, the consumer has made it easier on the industry to sell them a policy, because they've decided to only look at price, which is really only a piece of what the puzzle that you should be looking at as far as insuring your home, which is your biggest asset. So go above and beyond, folks. Give Richard a call. First of all, go to his website, richardtagency.com, richardtagency.com. Look at all of his information, then give him a call. He's going to talk to you, go through the entire process with you. Hey, by the way, he covers everything: home, auto, toys, the whole gambit. He will take care of all your needs. And by the way, he can bundle all of your different needs, even with different carriers. Your big box person cannot do that. Give Richard a call. Richard Tonica, richardtagency.com. Hey, folks, we're going to take a short break. See you in a few.